Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly and welcome everybody once again for another amazing video of DIY investing. I have one of the most important videos over the last couple weeks to share with you guys, one that I've spent a lot of time going through, sifting through information and data so that I can help you guys understand the best way to make profit over the rest of this year. We're also going to finish up by talking about this data by also covering Pulse Chain and why I believe that this is going to be the biggest opportunity all of us should be focusing on as we get closer towards the end of this year. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure if you're a new guy getting into these markets, you go ahead and download my free beginner's guide to crypto. If you want to learn how to be more profitable, understand some more of the basics of investing, links are in the description to go ahead and download it. It's free, not going to cost you anything, but I know it's going to help you guys out tremendously. Check it out, links are in the description. And with that being said, let's jump right into this amazing video today. Alrighty guys, so to start off this, we got a lot of really important things to cover. Basically what we're going to be going through, I'm going to give you guys a big picture of Bitcoin. We're going to be talking about downside targets in case we make a new low, and ultimately what is going to be created from a sell-off. If we get the sell-off or if we bounce, we're going to cover that. We're going to cover altcoins, what their market structure looks like, comparing them to the last cycle, why it's important to understand where we're at right now today, and how it applies to our portfolios and profitability. And then we're going to be finishing it up by talking about where we should focus, or at least where I'm focusing the majority of my attention as we get closer towards the beginning of this next cycle. There's really one crypto I'm putting the majority of my focus on, and we're going to talk about that as well. So let's get right into it for today's video. Let's talk about really some things that I wanted to cover, and that has a lot to do with the current price action that we're seeing for Bitcoin. I'm going to go through and remove my drawing tools, and we're simply going to talk about kind of originally what I was viewing this big picture of Bitcoin as, and how I'm starting to kind of change that perception a little bit. Now guys, keep in mind, the lower the Bitcoin goes, the closer that we're getting to the range lows, the more likely that it is that we're going to be actually going for one more final low. If we do make a lower low, below the low that we had here at 17.5, I do expect that this will be the final capitulation of this bear market. Now, if we do manage to go for another lower low, there's going to be some big implications on what that impact has on basically our next cycle going in. Now, it doesn't mean that it's bearish by any means. Bitcoin could literally go all the way to 11K, and it's still not going to change the big picture. But where we're at right now, we're getting in a really interesting point where the next cycle could be even bigger than we're expecting, and I'm going to kind of explain why that is. Now, first things first, guys, let's talk about our Elliott wave count. In every cycle, we have 3 impulse waves, and this was originally how I was drawing it. I viewed this entire move upwards of 65,000. This was our one wave. Our entire move upwards of 69,000 or 65,000 all the way back down to 17.5 would have been our wave 4. And we're still waiting for a final wave 5 of this cycle. This is kind of what I've been updating you guys with for a while. And that's kind of my initial plan that I was sticking to, was that this was a wave 1. We finished a wave 3. This entire bear market was just a wave 4, and we're about to start a wave 5. Now, what happens, guys, is the lower that we go inside of this wave 4, if we end up coming all the way back down and crossing back within this wave 1, it invalidates this count. This can't be a wave 4 because a wave 4 can't cross back within a wave 1. It has to hold support above. So where we're at right now, if we held support and went up, then yes, this can definitely be a wave 4 correction. But the lower that we go in here, and if we cross back within this 14K market structure, then that basically invalidates this count. And if this count's invalidated, then we have to go to the next count. And that would mean that this entire cycle is completed already, and that we already saw 5 impulse waves all the way up. And what we're in right now is the very ending of a completed ABC correction, and we're waiting for our final sell-off before it's done. This final sell-off will be the completion of a big picture ABC, and this ABC will be the ending of a major impulse, right? And so if this is the case, if this C leg crosses all the way back down, and it invalidates the idea that this is just a big 3 wave, then what that means is on the bigger time frames, this entire move from 3.2 thousand to 69,000 all the way back down to wherever we bottom would just be a wave 1. And then the next cycle would be a big picture wave 3, right? Something like that. And so this is kind of the way that I'm viewing the cycle. You know, if we invalidate our count by going back within our wave 1 market structure, then the big picture gets a little bit more bullish, because what it means is that this entire impulse, our entire last cycle, is just a wave 1. And the next cycle that's coming is going to be a big picture wave 3. For you guys that maybe aren't super familiar with Elliott wave theory, wave 3 are the biggest impulses inside of an Elliott wave sequence. Notice how small this one wave is. We see 3 impulse waves. 1, 2, 3, 4, 5, A, B, C. See how small that is? Well, it's small in comparison to the wave 3. The wave 3 is generally the biggest impulse of the cycles. It's where the most profits made. It's where the highest ROI is done. The most volume comes in. The biggest price return. All of that fun stuff for making life-changing money is made in a wave 3. So if our entire cycle from 3.2 thousand all the way to 69,000 and back down is only a wave 1, then what that means is our next cycle getting up is going to be a big picture wave 3. And that's why I have it drawn like this. We've only seen our first 3 impulse waves, followed by a corrective ABC down. Now, if this is the case, and we're about to get into a wave 3, in my opinion, wave 3 will take us to my target that I thought we were going to hit in 2021, which is $250,000 to $290,000 per Bitcoin. In my opinion, that's where we're going to be going into our next cycle. Then we'd have another bear market, and then we'd have, you know, another final impulse like that, right? I'm not trying to draw it exact. I'm just trying to share with you guys what the cycles are going to look like on a big picture basis. If this is just a wave 1 and we're getting ready for a wave 3, it's literally going to dwarf our last cycle. And this is where the majority of our profit is going to come in right here. And so even if we invalidate the count, it doesn't change the big picture. In my opinion, the big picture stays the same. The only thing that changes is our wave count. But as we're watching these things, I think it's really important that we actually take a look at other altcoins of the last cycle and some of those better performing altcoins of our last bull run, because in my opinion, these are also kind of telling us a very big story on potentially how the next couple of years of price action could look. Now, the first one on today's list is going to be Decentraland. Let's remove our indicators here, and let's talk about some things. Now, Decentraland had one of the bigger market cycles of that last cycle. I actually was accumulating Decentraland all the way back down here at about 3 cents, so it was one of my better returning assets as well. Now, we can see that we had this massive bull run, big blow off top wave 5 once we got all of the metaverse hype in here. And from that point, we've basically just been selling off. Lower lows, lower highs. We ended up crashing all the way back down to pretty much this support level. But, you know, we don't have confirmation. When I look at this chart, it reminds me almost exactly of when we're taking a look at Ethereum. And I think Ethereum is the best thing that we can compare current altcoins in a bear market to, because it was really Ethereum that's been the staple of altcoins. It's been the leader of all of the altcoins. And so generally, altcoins actually end up syncing up to the same price action as Ethereum in that last cycle. If we're looking at Ethereum in the last cycle, I think you guys are going to be able to understand just how similar each cycle actually is. We can see that wave 1 was down here. This is the beginning of the bull trend. You can't even see it when we scrunch the chart out. But then we can see once we start to go parabolic, we go through our first real big lead up. We kind of consolidate here. And then that's what takes us for our final blow off top of that cycle. It's the exact same thing we saw with Decentraland. This was the accumulation, this was the build up phase, this was the blow off top, right? And so where we're at today is literally just the bear market. Now when we're looking at this price structure, in my opinion, exactly where we're at, this is our first lower high. It's the same as right here. We drop, we sell back down to support. And if you guys notice, we go through this little period where we originally dropped a support in Ethereum and we kind of consolidated in this triangle. It looked like we could be rounding out. And it was right at the bottom of this 4-wave support. Because keep in mind, this is what our Elliott waves look like. This is our wave 1, this is our wave 3, 4, and then this is our wave 5, right? That's how Elliott waves look. That's why I've been telling you guys that on the big picture, We've only finished 3 impulse waves if it validates our count. So we're still going to be expecting to have a big wave 3. Well, if we're looking at Bitcoin, this was Ethereum's wave 3 and wave 4. This was Decentraland's wave 3 and wave 4. And they all look pretty much the same, right? Now, in my opinion, where Decentraland is today, it's at that exact same point. What we're missing is our final capitulation, right? Decentraland sold back down, it sold off right back into 4-wave support, I should say. Ethereum did the exact same thing, sold off right down to 4-wave support. Everybody thought that it was going to bottom there, and then we sold off for another 60% drop right here. This was a 60% sell-off that took us all the way back down to 80 bucks. So if that's going to be the case for Decentraland, we would be looking for a drop probably back down to 20 cents, which, you know, could be an 80% drop if we're talking about the high that we just made. From where we're at right now, it'd be about 68%. That's a pretty massive type of drop. But at the end of the day, guys, I believe that the biggest majority of this bear market is behind us. If you've already been holding throughout this entire period, the best thing to do would just be to walk away, wait for a couple years until the next cycle kind of picks back up again. But I mean, when we're looking at these charts, if we're going to end up creating pretty much the same sort of pattern that we did in the last cycle, it can look a little different, and it will. But if we're just going to sit here and compare kind of what some of these altcoins did in their last cycles, then I think a lot of people are going to get shaken out by potentially how long it's going to take for us to actually get to that point. And that's another big point that I want to make here for you guys. It's the fact that, you know, this could take a little while to resolve, right? It could take, you know, it could be mid-2024 before we're finally back at a point where we're ready to start going into a new cycle. But at the end of the day, guys, this is nothing new. I mean, if you've been around for crypto cycles, some of you guys maybe haven't, but I've been around. This is now my second full bear market. With this being my second bear market, I already kind of know the process of what it's like to go through one of these. And the market structure looks pretty much the same as prior cycles. Nothing looks that different. The only real thing that we're missing here, in my opinion, is our final sell-off. That final capitulation will take us to our accumulation range. And you know that from that point, we're going to wait and really wait and see whether we're going to go for a year and a half of sideways accumulation before we can start a new cycle, or whether this is going to be a little bit different. But at the end of the day, guys, when I look at this, it's not that different from prior cycles. If we were to take this, it would probably be from this point on in which we started going sideways. So if we just start pretty much following the same rule of thumb here, it could easily just end up looking something along the lines of this, as we're pretty much just trending sideways for the next perceivable while, right? We don't know exactly how it's going to look, but I am expecting one more final drop and then that to start the accumulation range. But if it's anything like the last cycle, you know, chances are it will be like the last cycle, and the accumulation just looks like this. It's not anything to be excited about. Lower lows, lower highs, the market's not really doing anything. If anything, it's trending sideways at more of a diagonal slope. Some altcoins will just be doing this. Some altcoins will be doing this. Some altcoins will even be able to maintain somewhat of an uptrend. And, you know, at the end of the day, we'll be looking for all of these scenarios for what we're going to be buying. The big thing I want you guys to remember here is that the slow part of the cycle is most likely going to be starting now. And this is the part where, you know, the volatility dies, and that's designed to shake out the weak hands. Now, another crypto I want to take a look at today is actually going to be Solana, because in my opinion, Solana looks the most identical to that ETH chart. And it's also very similar to the one we just looked at with Decentraland. So let's go through here and let's talk about it, the reason why these are so similar. So for example, guys, the price structure between Solana and Ethereum is almost identical. We get the same 3-wave, 4-wave type consolidation that takes place on the 50-day moving average. That takes us to our blow-off top. We peak at our blow-off top. It starts the sell-off back down. We get a bounce off the 50-day, hold support. We bounce. We get a sell-off below the 50-day. It bounce. It becomes resistance. Same thing there. We sell off for another lower low, right down onto support of wave 3 and wave 4. Same thing happened with Ethereum in the last cycle. we start making this rounded type structure that appears like we could be ready to break out, and then we go for one more capitulation to end our bear market. In my opinion, what we're missing right now for Solana is the final capitulation. We're most likely going to be heading downwards of $20, $10, $20. That would be my guess. But this is the reason why I'm sharing with this chart with you guys, is to share with you how long Ethereum went sideways here. It was literally from the very bottom of the cycle to the point in which we like flipped out of the accumulation. It was like 580 days that we were going sideways. And then, you know, we obviously went for a nice bull run and a new all-time high. But this is the big point I want you guys to remember. There was a long period of time in which the market did nothing but go sideways back and forth. And anybody that was trying to trade that got chopped up. Anybody that was trying to nail the exact bottom didn't. And it was a very volatile time. All you had to do was just buy, accumulate, hold. And eventually, a year and a half down the line, it would have paid out. But this is the big thing, guys. We are back in that same point. We are back in the same point of focus. Even if we look at the time frames, if we look at the top of this cycle for Solana, draw all the way over to where we're at today, you're looking at 305 days worth of consolidation. If we go to the top of Ethereum cycle, all the way to the point over where we started the capitulation, it was 303 days. So it's not a coincidence that the price structure looks the same. It's not a coincidence that the price structure looks the same at the exact same time frames from the all-time high. It's because all of these are correlated. We keep repeating 4-year cycles. And that's why it's so silly to me that people will sit here and say, oh, 4-year cycles are dumb. Anybody that follows that's an idiot. When every cycle has followed a 4-year cycle literally perfectly. But that's kind of my thoughts with what we're talking about here, guys. I'm really bullish on the long term of crypto, but I think that it's going to take some time before we're actually at that point. Now, we've talked about why I think crypto is so great. We talked about why I think we're going to have one more lower low here. Now let's talk about where the opportunity lies for the lower low. Should we be focused on Bitcoin? Should we be buying Ethereum? Should we be buying Solana, some of these other cryptos? And my answer is no. I'm not going to be buying any of those. I've got one crypto that I'm focused on, and that crypto is Pulse Chain. One of the biggest reasons why I'm bullish on Pulse Chain is because of the fact, if we come down here and remove our drawing tools, it's not even out yet, right? So as we're watching all of these cryptos having to sell off, having to figure out when the bottom is, not knowing when the true bottom is, we're watching Bitcoin without any true confirmation. And so during these times, it's the hardest time to buy in the bear market because what we're doing is catching a falling knife. If we're watching our crypto and we're looking to be buying it, there's no knowing when the true bottom is going to be, and so you might buy it, and then it might drop another 50% without us even having any clue. And so we might have to just keep buying, taking massive losses without ever knowing when the market's going to flip. We might understand that, hey, we're really close to that point, but we might not know, and that's where it kind of gets difficult. Well, one of the big reasons why I'm so focused on Pulse Chain is because I'm not really trying to catch a falling knife. I'm not trying to figure out when the exact bottom is for crypto. I'm not really so worried about that. I mean, when the accumulation range starts, chances are it'll be fairly obvious to identify. Obvious enough that you can accumulate at the low, but that's not what's important. What's important to me, an ecosystem that I can get behind that I feel has the most opportunity. And in my opinion, there isn't one aside from Pulse Chain. One of the big reasons why I think Pulse Chain is going to do so good is because of the fact it's not out yet. If you're a new crypto and you launch in a bear market, and you launch at a middle point of the bear market where we still have drops, we still have big sell-offs like these two, or even if we make another lower low like this future one will be. And when we have these big drops, there's no liquidity in the market. So if you're a new project, it's extremely hard to be successful when you might raise liquidity and then all of a sudden Ethereum drops 40% and then 40% of your liquidity is now gone just because of volatility alone. And so due to this volatility, it's hard to know what to buy in a bear market. And I would argue to wait until the accumulation range starts, because in the bear market, you know, chances are it's going to keep dropping on you. And so with Pulse Chain not even being out, I think that instantly helps it, because with Richard Hart, he can be patient when it comes to the release point of this crypto. He can say, well, crypto's down. I'm just going to wait until something big changes in the trend, and then I'll just release it. Well, if he waits until the beginning of the bull trend, when the very end of the bear market is, then there really is only going to be positive liquidity to go into that market. Some of the best returning cryptos were started at the very bottom of a bear market. And it's not coincidence. When you're starting at the bottom of the bear market, all of this bubble money, all of this retail money that was here at the top has now panic sold, and you're literally starting out at rock bottom prices. And so you only ever have move to move up. If you're a crypto and you've went through a prior cycle, you have all of these bag holders that bought all the way up here. And so all of these bag holders, when the market starts to do this, and we start to reverse again, and the market starts breaking up, all of these bag holders are going to start to sell. All of these people that bought the top, they're going to start to sell, and it's going to cause the price in the short term to sell off. The more bag holders you have from a last cycle, the more sell pressure that you have as a whole. And with Hex not even ever having a prior cycle, in my opinion, the upside potential is just that much greater. There are so many big things that I can draw on the conclusion of Hex, but when I'm talking to you guys about these charts, what I'm sharing with you guys is that we still have one more low. And the reason why Pulse Chain isn't out yet is because Richard Hart expected one more low. He's waiting for 11K per Bitcoin. That was his target. He said that he was going to release Pulse Chain at 11K because that's where he felt the bottom of the bear market is. If we start making a lower low and it starts getting relatively close within here, in my opinion, that's going to be the lowest low of the cycle. We're not going to make a lower low past that point. Because at that point, we're literally looking at an 85% sell-off, 80% sell-off approximately from the all-time high. All of our prior bear markets were about that same percent loss to the downside. This one was about 84%. And so we're right there on path and on par with prior cycles. If we do the exact same thing again and then Pulse Chain gets launched right here at the bottom, imagine Pulse Chain gets launched right here at the bottom. The market immediately bounces to the upside and we get this big swing all the way back up to 47K per Bitcoin. We might pull back here, do something like this. But imagine this happens. Imagine we get this massive move off the lows similar to this 14K move in our last cycle. Imagine that happens. During this move up, Hex would already do like 50x returns for the people that got in at the floor. That's why it's so important that you're getting into these cryptos at the bottom of the cycle. In my opinion, the most profitable way to make money, ignoring specific cryptos, I'm not even meaning specifically Pulse Chain right now, but the best performing assets were those that started closest to the bottom of the bear market. Or the people that made the most money in the last cycle were people that bought the cycle lows. They were watching these altcoins that had just gone sideways forever. They decided, hey, I'm just going to throw some money in it and see what happens. And they got in so low that when the bull market flipped, they literally made 100x for pretty much doing nothing besides just happening to have the patience and the perseverance to buy when the market was low. With Hex, well, not Hex, with Pulse Chain starting at the bottom of the cycle, all there is room to go up. There's not going to be all of the added sell pressure from launching in the bottom of the bear market. If you launch in the bottom of the bear market, or what I should say in the middle point of the bear market, let's assume that you launch. You make a listing pump, but then the market pulls back another 60%. Well, your market is now trending like this. You're now all the way back below here, and you now have bag holders that are holding here, you have bag holders here, you have bag holders here. So when the market starts to go back up again and we start hitting these levels, these bag holders begin to sell and it causes the short-term price to go back down. When you're launching at the literal bottom of the bear market and the market just starts trending up from there, there is no sell pressure. You're literally starting from here and then just going up. And so the moves that we can have to the upside are much, much greater. This is all kind of reasons why I'm so focused on this. Now, in my next videos, what I'm going to be covering, I'm going to actually mess around with this I'm actually going to be messing with the Pulse Chain testnet. So if you guys want to kind of see how we're going to be using this, how it works, some things like that, I'm going to actually go through and walk you through the step-by-step process on adding this on a MetaMask wallet. We're going to go through, use the testnet. Some people are going to be giving me some free testnet tokens so that I can play around with them. And so I'm going to kind of be going heavily into explaining how this process works so that everybody's ready when it comes time to the launch day. A lot of people have been asking me when this is going to launch. A lot of people have asked me if I'll make a video when it launches, walking through everybody. And I'm going to make sure that you guys are better prepared before it even launches. I want you guys to be ready beforehand. So some of my next videos are going to be us covering how to actually set all this stuff up, how to get it ready, so that when the day comes of launch, not everybody's scrambling to do it at the same time, we can already have our devices ready to go. So if you guys found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server or download my free ebook, links are in the description for that. For the people who would also like to sign up for my VIP, follow all my trades, follow all of the new ecosystem picks that I'm going to be investing in Pulse Chain. The only way you're going to get access to all that stuff is if you're inside the Discord server. How I'm going to be changing my portfolio. I'm definitely going to be changing a lot of stuff with my long-term portfolio, moving different cryptos back into Pulse Chain, because I feel like this is definitely going to be the best scenario for me. So if you guys found value, if you guys want to actually see what I'm going to be doing, what specifically I'm moving in and out of, links are in the description to go ahead and sign up on my website. Thank you guys so much for the support, and with that being said, I will catch you in the next one. As always, peace out.